Hey everyone, I'm Szafron. This is Kitco News. Don't forget to subscribe for the latest market analysis. Well, today on the show, silver's making headlines again, recently reaching its highest level since December 2012 at around $31.50 US. Now, this surge is driven by robust industrial demand, particularly from green technologies, and the expectations of the Fed to cut interest rates later this year. Now, analysts from JP Morgan and BMO predict silver could potentially reach $35 US per ounce by the end of 2024, highlighting a bullish outlook for the metal, even though today we're seeing a little bit of profit taking and the resistance around the $32 level. So why does this matter? Well, silver's rise isn't just a market anomaly. Global silver demand is forecasted to hit 1.2 billion ounces in 2024 alone, and that would be the second highest level on record, indicating strong and sustained demand. And on the supply side, the market is expected to remain in deficit for the fourth consecutive year, despite a projected 4% increase in mine output. And this ongoing supply and demand imbalance is creating a very supportive environment for higher silver prices. Now let's break it all down and welcome back our friend Bill Baruch. He's the president of Blue Line Futures and a seasoned technical trader renowned for his expertise in commodities and the precious metals market. Hey, Bill, welcome back on the show.
Thank you for that introduction. It's a pleasure to join you.
So, Bill, let's rewind here. I just talked a little bit about those silver prices. They recently reached their highest level since December 2012. You know, given this surge and given what we're seeing today, help us make sense of it and give us your short-term and long-term forecast on silver prices, if you could.
The fact alone that silver has gotten above $30, a ceiling that we've seen, you know, amid exuberance, go back to the pandemic. I mean, it's seeing it above $30, I think, is a big feat. And now we just got to hold it. I think there's, as you mentioned, commodities are under a little bit of pressure here today. What really matters is a constructive path. I mean, there's going to be profit taking, and there's going to be swings lower. There's going to be news headlines, and there's going to be different things that become headwinds as this journey continues for silver. But as long as it stays above $30, I mean, what we want to see is it build a new base and then use that base. You mentioned some have a target of $35 out there, and that is a big technical target. If we could base out above 30, broadly speaking, I think $35 should be in the cards.
Yeah, well, let's unpack that a little bit. I mean, those are the analysts from JP Morgan, I think BMO. They came out, they said, hey, this could potentially reach $35 per ounce by the end of the year. You look at the markets today. I know we can't push quite past that resistance level, but is this a lowball number, or are we going to? Could this be even higher than that 35?
Listen, if you really back out the truck and you look at what some of these different commodities have done, cocoa, for instance. I mean, gold has had an incredible move as well, and silver is known to have more volatility than gold. But if you look at what some of these commodities have done and how suppressed for since the 2011 high. I mean, this move has been a decade in the making. I mean, yeah, we should be able to move out above 35. What would say we can't get to 40? What would say we can't get to 50? And what would say, I mean, with growing demand, growing narrative, and this becoming a mainstream move, what's to say that we couldn't get to $70? Listen, I think anything is really in the cards here. And, we work with a wide range of clients. I mean, our team at Blue Line Futures, some people just want to have silver exposure, and if that's you out there with silver exposure, that's where you're looking at it staying above $30 in the near term. Others want to trade it. When I'm doing a Blue Creek Capital, my commodity fund, I'm trying to manage my downside here and capture all the upside, and I'm more active in trading this. I'm looking at more shorter term targets and saying, okay, now 32.75 is a bit of a resistance level that we've tested a couple times. And if we don't get out above it, looking at yesterday, if we didn't get above it, now we're likely to get away from profit taking. So you prepare for some of these more little moves, these micro moves within the market.
Yeah, it's an interesting trade. And as you mentioned, silver's been testing support around that $30 mark, resistance around 32, maybe just past it. But, you're a technical trader, so I'm curious with technical indicators such as the RSI, the relative strength index, the moving averages. It seems that we're seeing some bullish trends here. How confident are you in a breakout above these levels? And what indicators do you consider most reliable when you're looking at your trades?
Listen, silver, I've always looked at as the higher volatility of the metals complex, and as well, the one that becomes a follower of sorts before it finally takes the lead. And you look at gold, you have to talk about gold if you're talking about silver. And some of the projections I have for gold would say gold can get to 27.90. Now, we haven't even had the first Fed rate cut this year, but on average, within 30 days or 30, maybe 60 days within the Fed's first rate cut, gold has averaged a 6% gain. So, I mean, gold maybe is front running a little bit, but we're seeing rate cuts as the year evolves kind of fall off a bit. And gold has continued to do very well due to fiscal policy, due to geopoliticals, as well as demand from the BRICS, Brazil, Russia, India, China, of course, which has just hit their 18th straight month of expanding their gold reserves, although at a lower pace, and South Africa. So, I mean, I think there's a tremendous amount of gold demand out there. And then you have copper, which just set a record high. And I mean, there are commodity traders, commodity investors that I've looked up to for many years that have put out targets with copper with 2 digits above $10. So when you look at the expanding industrial cases that you've talked about with silver, you look at what's driving gold, and you look at further with copper, what's going on with data centers, and then maybe China coming back online and being a big catalyst as well. Their improving economy. You know, silver, I think, has 2 major tailwinds here. And I think that's really why when I take a step back and I look at it, I'm not so just trading and trying to manage my risk and my commodity fund, but saying, okay, if you want to be long silver, this breakout above 30 is extremely significant because of all these tailwinds that are still here to play out. And as long as it can stay above 30 from a technical basis, this is a breakout. This is a decade-long breakout that has played out and is playing out now. And as long as it holds above 30, I think the path of least resistance remains higher to 35 to 40 to $50 or more, maybe.
Yeah, a lot of people would be very, very happy to see a $50 silver. Let's talk about those tailwinds a little bit, Bill. Break them down a little bit for the audience, because, you know, you mentioned gold, and we'll get to gold in a second, but, you know, ETFs on the silver side are seeing similar inflows, and there's strong demand for the retail investors. Obviously, it's less costs than silver. What's the impact here, and how long are we going to see this sustained?
I mean, this could be a new regime. I mean, it's a commodity supercycle, and as I mentioned, it's not just gold and silver and copper. I mean, you look at cocoa and some of the moves we've seen in coffee and other commodities out there have been really tremendous. I think we are in a commodity supercycle, and this is the aftermath of you know, if you look at commodities, the demand that's coming out of the pandemic, different supply chain disruptions, I mean, others that are affected geopolitical issues and local political issues that affect some of these commodities as well. So when you take a look at, I think you have to, if you look at silver, I mean, just narrowing it down, looking at gold, as I mentioned, the BRICS, which is Brazil, Russia, India, China, and South Africa. I mean, there is a new geopolitical regime that's being developed. I mean, you're seeing with the war, the Russian war in Ukraine. I mean, what's taking place there, the geopolitics that have taken place with Israel surrounding with Gaza, surrounding with what's going on with Iran. I mean, there is an ever-present heightened geopolitical tension that's continuing to go. And as I mentioned, with China's central bank buying tied to that, they're allies of China. When you're looking at Iran, you're looking at Russia, and so the regime that's being developed here is attempting to move away from the U.S. dollar. So I think that's the importance here as they expand their gold reserves. This is potentially just the beginning. And so if you take that tailwind, you look at what's taking place as well on the industrial side, the onshoring. You know, we're investing into semiconductors and being able to build those domestically. I mean, the amount of money that's being put into that. I mean, not only that, that's fiscal policy, printing more money, degrading the dollar. There is a lot of tailwinds that are developing here. If you just kind of pick your poison, what is the catalyst? What is the tailwind here? So my only question is, you know, why did it take so long for silver? And I think it's and that's the fact that it has taken so long is why this is such a big feat and why it's so critical for it to stay above $30.
Yeah, I mean, some keep people calling it the perfect storm. I mean, let's talk about the supply side issues here. The silver market's faced supply deficits for 4 consecutive years, obviously supporting higher prices despite that varied investment demand. But, you know, major producers like Mexico, Peru, they face potential disruptions. When you look at these investments, when you're looking at the market, how do you mitigate risk? What are you monitoring in terms of that risk here?
Listen, I mean, there has been production disruptions that have taken place in Mexico and in South America, and I think that is something that has been a catalyst. I mean, if you look at copper specifically, I mean, they can, and again, you're not to move away from silver, but these are tailwinds that are pulling silver as well. When copper is performing, so does silver. I mean, look at copper. The issue. I mean, the smelters have cut down actually creating the finished product of copper because they couldn't get the raw material. And then basically the CP, the premium, the refining, which is essentially sort of what goes into refining copper, traded at negative. So these smelters, I mean, they are potentially losing money. I mean, you would think that mining would bring back on more supply of copper, but maybe it's been more scarce. Maybe the input costs of these mining companies make it more difficult. At the same time, I mean, these mining companies have had suppressed prices, suppressed earnings, have carried a ton of debt for many years. So as interest rate rose, these mining companies, they didn't follow. Even the small improvements you saw in the underlying price, as well as the broader market over the last couple of years, I mean, this is their time to shine. So, I mean, ultimately, I don't, the same way you look at the energy companies that in 2021, these energy companies in 2021, when crude oil finally got above $70, they were still underperforming significantly. It took a bit of time for it all to be baked in. So, I think there's just, again, a number of tailwinds here in an industry that has had a lot of headwinds and has been suppressed for quite a while. So this is, again, I just keep coming back how exciting this is to finally see.
Yeah, no, it's exciting. I mean, we keep watching it. I mean, go back to gold for a second. It's obviously set several new all-time highs this year, but silver's record highs are still far off. So, I mean, there's a divergence here, but how soon could we maybe see new record highs in silver, and what kind of environments are going to take?
Yeah, what we're actually seeing from relative to gold, if you go back, the gold silver ratio, if you go back to the strength that we saw coming out of the pandemic and in some of the commodities, silver outperformed gold for a period of time. And that would put a low essentially in that ratio. And that ratio has had higher lows since that 2021 bottom, meaning gold has outperformed silver continuously. I mean, of course, there was spurts of movement in silver that may have highlighted outperformance for a small period of time. But broadly speaking, this was a very well-defined uptrend, meaning gold continued to outperform silver, a very well-defined trend line. And in this past week, it finally broke this. The move in silver finally broke this uptrend. Now it is breaking down, meaning silver is now outperforming gold. And that trend line was broken at 82 at a ratio, and it's now at 70. So sort of once the lid comes off, I mean, that's kind of what we're hoping for here. I mean, managing your risk, and that's why as I manage my fund at Blue Creek Capital Management, it's managing this risk ever presently. I mean, there's continuous different news flows that could be headwinds, and just last night we had news that China is going to potentially increase tariffs on imports of U.S. and EU cars to 25%. Copper has been pummeled here on this Wednesday. It's been a brutal day for copper. So there are always going to be surprises. So when I manage my risk, when I manage things, I utilize put spreads and puts. I utilize stops. I try to look for well-defined technical entry points to take on a little more risk that I can keep a tight leash on, while trading and keeping around a core position of silver and gold and other metals that keep in the portfolio.
Yeah, talk to me a little bit about copper here, Bill, because as you mentioned, we've seen a little bit of a kick in the butt on prices today, but other metals are moving here. So when you look at something like this, are you looking long-term, or are you looking for a short trade?
I think this downside is definitely a big shakeout. And I mean, it could last longer than the bulls are comfortable. And that's what I'm being prepared for right now. But I think, again, this is a commodity super cycle, and it's really been sort of a dominoes falling. You got gold made the move, copper made the move, silver's made the move, and platinum and palladium, which are also significantly undersupplied and are going to get tighter and tighter here in the coming year or two, have really underperformed in the recent move. So I would think that we could see something from platinum and palladium in the next few months before this end of the year. I'm also involved in aluminum. I mean, when you hear about copper involved in data centers, aluminum is also a catalyst. Data centers are also utilize aluminum too, and aluminum has performed a bit better than platinum and palladium. It's had quite a bit of a move of late, but it's still undervalued relative to some of the all-time highs that it's seen.
Right. And, we've seen that volatility even within the silver space in the EV market. Talking a little bit about those metals, we see EV demand go down, and of course, copper gets hit a little bit. Talk to me, though, about platinum and palladium, because the catalytic converters, when we talk about hybrid cars, they're really not going away. So is this one next?
Yeah, I mean, I'm a believer in in the hybrid as something that's going to be continued to be more dominant. Listen, I run a registered investment advisor. I run a wealth portfolio company as well called Blue Line Capital, and yet we own Tesla in there. It's not a major position, but people ask me, are you a believer in fully EV? So overall, I'm not. I mean, I'm not somebody that thinks that 20 to 30 years from now that we're going to go all EV. Every car you drive out there is going to be EV. That's not what I believe, and I do believe that hybrids are going to become more prominent. I think it's going to take a while. I think petroleum, runs the world, and if we're not going to move away from petroleum, and that's something that people have to come to terms with. At the end of the day, though, I think the fact that hybrids are going to be more relevant than forecasted a year ago and 2 years ago because of the projections of governments pushing towards EVs, that could be a catalyst, and it takes time for bigger or larger narratives to play out. So it does get me excited for platinum and palladium in the coming months, the coming year or two.
Yeah, Bill, you talked a little bit about Tesla. When you talk about your fund, before I let you go here, give our audience maybe a couple of takes on the equity side. Is there anything you're watching in this market that might be a really good trade here in the next while?
Well, it's really tough to say. I mean, so we're recording this Wednesday afternoon. We set the Fed minutes out, and in about 2 hours, whenever NVIDIA is going to report. Now, I'm a believer all roads lead to NVIDIA. You look at it's one of our top holdings, but you never know what you get from this earnings report. Although I'm pretty optimistic about it. At the end of the day, you see these hyperscalers. They're spending a ton of money on investing in AI. One of the ones that I love that hasn't spent a lot and hasn't come out with a ton on the AI side just yet is Apple. We're starting to see some news trickle out, but the spending is continuing to increase, and it's going to NVIDIA. So that's something to keep an eye on as they need more GPUs, and as AI becomes more relevant. That leads back to copper. Leads back to aluminum. Those are tailwinds for silver. So it's just one big circle. It really is, and I think that's the way to look at it. There's so much. Rather than giving you a trade right here, right now, the idea is it's this world and the demand that we see of commodities and what these companies are doing. It's much more intertwined than you may think.
Yeah, it almost feels like people are just now getting educated on the energy front when it comes to EVs, things like this. That we're not transitioning that quick, and there's still a long ways to go with this transition.
Yeah. I mean, I think it's quite the transition's taking place a bit. I mean, I think there's going to be a lot of hurdles. Like I said, I don't think we're going to see a transition to the degree that people are expecting. It's going to be now. It's going to be a hybrid transition. That's what we're looking for. And it's going to take a lot longer than people expect. A lot longer.
Hopefully good for Platt, too. Hey, thanks, bud. Bill Baruch coming on, president of Blue Line Futures, joining us today. I appreciate your insight onto this. Best of luck. Hopefully tomorrow's a good day.
Yeah. If you finish this is just a little shakeout. The metals love to do it. Manage your risk if you're involved. We at Blue Line Futures, that's what we help clients do.
Yeah, and everyone likes to take a little profit. It's healthy.
Yeah, it's true.
I appreciate it. Thanks so much. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We've got lots of great content to come, so be sure to hit that notify button, and we'll see you next time.